Ever glance at your mortgage statement and wonder, could I be saving hundreds each month? Yeah, that sounded familiar? You're not alone. For many South Dakota homeowners, refinancing now might be the key to unlocking significant savings. But for others, jumping in too soon could cost you more than it saves. What's frustrating to many homeowners right now is how can you know what category you fall into? Can't I just give you something that helps you determine if refinancing makes sense or not? Well, yes, I can. Stick with me. And by the end of this video, I'll provide you with a tool to utilize along with the no fluff formula that we'll walk through together to determine if refinancing makes sense for you, especially here in the Mount Rushmore state. The timing of this video couldn't be more perfect, with mortgage rates recently dipping and offering a potential window for savings. As of late September 2025, the average 30-year fixed mortgage rate in South Dakota stands at 6.56% per Zillow. While not a drastic drop, it's enough to warrant consideration for homeowners meeting certain criteria. Hey, I get it. You're cautious about hidden fees, the no-cost refinance traps, or refinancing too soon. And I hate to say it, probably should be. And it's also frustrating when national headlines promise lower rates, but your quote doesn't match up. I'm telling you, there's a reason for that. And that's exactly why I want to give you the tools to determine if you're a candidate for sufficient savings through a refinance. You might have heard you should only refinance if you can drop your rate by a full percentage point. While a 1% drop is ideal, it's not always necessary. What truly matters is your break-even point. This break-even point is where the total costs of refinancing are divided by how much you'll save by refinancing each month. The output of this formula gives you the number of months it will take you to recoup your costs. So let's say you have a $300,000 loan with a total refinancing costs of around $5,500. If dropping your rate by 0.5% saves you approximately $120 a month, your break-even point is about 46 months, or just under 4 years. Now, if you plan to stay in your home longer than that, refinancing could lead to real savings. Just to give you an idea of where average rates are at in South Dakota, according to Zillow, the average 30-year fixed rate is around 6.56%, and the 15 is around 5.79%. Now, refinance-specific 30-year fixed is at 6.73%. All right, with that in mind, let's keep discussing some of the things to be mindful of when considering refinance. We have touched on them briefly. Remember the hidden fees that often aren't discussed as in-depth as maybe they should be. So here's what to expect and what to look out for. Expect to pay for appraisal fees. Unless your home has appreciated enough for an appraisal waiver, which means that there is enough information on your property and the properties in the surrounding area to not need an appraisal. When an appraisal waiver is established, it's usually when the home's loan to value is less than 80%. However, in no way does being at or below 80% loan to value absolutely guarantee that you'll get an appraisal waiver. Next, since you're paying off your old loan when you refinance, you can expect escrow refill costs if you're planning to escrow again, as new loans often require fresh escrow amounts for taxes and insurance. Finally, those no-cost refinance, be very wary, my friends. The fees are somewhere in there. Fees may be folded into your rate or principal balance, so always be sure to compare your total costs, not just the monthly payment. Now, I'll say it's probably just as important for me to discuss when refinancing may not be right for you. There's quite a few things to consider during this thought process. So here are some of the major scenarios where refinance may not be in your best favor. First scenario, if you're planning to move or sell your home in the next 2 to 3 years. Quite simply, the closing costs incurred during a refinance may never pay off. The other is if your credit score is lower than you expected. Now, why is that an important factor? Well, you might not qualify for the best pricing, or you could qualify for better pricing if you know that you can work on getting your credit score built back up. Another scenario, if your loan is mostly paid off. Refinancing could reset the principal and reduce the overall benefit. And lastly, when looking at a cash out refinance, you'll be seeing your payments stretching or possibly losing favorable terms that can cancel out the benefits altogether. Those items we just went over, that's the stuff that you have control over. These other items to keep an eye on have impacts on the market that are completely outside of our control. In South Dakota, keep an eye on inflation reports, this being the CPI and PCE inflation reports. These affect bond yields and rates. Federal Reserve signals. Dovish policies may help rates, while tightening may push them higher. Local equity trends. Many South Dakota homes have appreciated, potentially qualifying homeowners for better refinancing deals. Citing Freddie Mac's mortgage rate forecasts, if economic conditions remain favorable, the 30-year fixed refinance rate offers could dip to around 6 to 6.25% locally by mid-fall. Dropping below 5.75% would require significant economic shifts. Now here's our 4-step South Dakota action plan. Let's walk through this step-by-step process to figure out if refinancing makes sense. Step 1, pull your most recent mortgage statement. Take note of the current balance, the current interest rate, and your remaining term. Step 2, check your credit score and your home's equity. There's a few reasons why this is important. First, rising home values may qualify you for appraisal waivers or better pricing. Second, this information has a direct impact on the interest rate you'll qualify for. Step 3, with that information in hand, reach out to a lender for a quote. Be sure to clarify if you want an interest rate quote for a 30-year, 20-year, or 15-year loan. And you can also ask for an estimate on closing costs. For step number 4, I'm going to break out this refinance break-even tool that I can provide to you. So if you're interested, just reach out in the comments section. Now it's example time. Using the break-even tool, let's enter in the information we just collected in steps 1 through 3. For our example, we'll plug in our current monthly payment of $2,150. We got that from our recent mortgage statement. Now, the new loan amount. First, let's circle back to our recent mortgage statement again. This shows a loan amount of $300,000. So, let's plug that amount in to the new loan amount. Then, referencing the estimated interest rate of 6.5%, let's plug that in along with the loan term associated with the interest rate quote. In our example, 30 years. Finally, let's take another look at the information from our quotes in step 3. For estimated closing costs, we'll say $5,500. Now, we can either include that $5,500 into our new loan amount to make our new loan amount $305,500, or we can plan to bring that cash into the closing of our refinance and keep our loan amount at $300,000 even. Let's look at both options. First, including the closing costs into our new loan, or a new loan amount of $305,500. Hit calculate. There, you can see it will take 26 months or a little over 2 years to break even. Now, if we plan to bring closing costs in from our own pockets, we'll keep our loan amount at $300,000. Calculate again. You can see that shortens the break-even point to 22 months or a little less than 2 years. To start really benefiting from the savings, if your numbers add up and you'll stay in your home long enough or certainly beyond the break-even point, refinancing is often a smart move. All right, let's wrap it up with a quick overview of what we discussed. Current refinance and purchase rates benchmarks, the 30-year fixed and the 15-year fixed. Next, break-even math is typically favorable if you have good credit, sufficient equity, and plan to stay 4 to 5 years or more in your current home. If your timeline is short or finances aren't strong, waiting or improving your profile may be a smarter move in the short term as opposed to refinancing. And most importantly, refinancing is a tool, not a guarantee. Use the numbers, the timeline, and your goals to guide your decision. When you do move forward, make sure it truly benefits you. So if you want access to that break-even point calculator, please reach out and I'll be happy to send you the link. Thanks for watching. If this video helped, please subscribe for more South Dakota specific mortgage updates. And remember, you're in control of your financial future. Make informed decisions that always align with your goals.